What's up, guys? This will be the first video, the intro video to a series going through how to be and achieve consistency trading options. Options, they can provide a bunch of freedom and they allow the ability to leverage lower sums of money in order to make higher potential gains. Also increases your risk there. But the main thing we're going to be focusing on is kind of a crash course from very beginning to more advanced strategies, using unusual whales, using some things that can help us find that edge when it comes to trading. The big thing we're looking for here, just consistency. Throughout this series, going to focus on keeping the bullshit out of it, right? There's a lot of things out there that are just focused on some fluff. And I think now is more important time than ever to really be focused on this. And that's because we're not in this crazy bull market we had earlier for the last, about 2 years, since March 23rd, 2020 is when we had that hard bounce and consistently just kept going up. Now we're having more chop days. Days are not running up percents, which makes it a little bit harder to trade. Also, it makes it so that you have to have a defined strategy, have to have good risk management, all that good stuff in order to actually make money in this game. Options provide the ability to achieve that financial freedom, or that freedom of time that a lot of people are out there going about. But I think the most important thing we should start with is the market moves based off of psychology. That is why support and resistance works. That is why a lot of things work in this market, is because of previous price action, because of what buyers and sellers are thinking. Most of the indices are going to move off of economic data. You can trade both the upside and the downside, which is really great. A really, really good reason why I personally love options the most. But throughout this series of videos, we're going to go through everything from understanding the basics of options, calls versus puts, strategies that can be used both on the calls and put side, how to identify support and resistance, with the main goal, as stated before, being able to do this all by yourself, not relying on that pump and dump scheme, which it's a lot harder for people to pump and dump now because we are not in that crazy bull market. We'll go over all sorts of things. So through this, I want to go into that and really be able to push out useful information that isn't bullshit, no fluff, the stuff that has worked for me on my journey. Obviously, I don't know everything about the market. If someone were to tell you they do, I think they'd be lying to you, because the market, it changes every single day, which is a great thing as well. And in order to do that, there are going to be strategies we need to use different days. So having 1 to 2 core strategies that we can use, say on a gap day versus a normal day where there's a lot of chop, being able to use those strategies to make money and achieve that consistency that is the hardest part of options trading, is that consistency and the psychology aspect. Release a video every Sunday, Monday, Thursday, 3 times a week. Shorter format videos so it's not too tedious, and really hitting on those really important aspects. I won't cover psych as much just because I think it's a little bit boring and harder to cover just in video format. So there's podcasts out about it, a bunch of different stuff and resources that way, but psych is going to be very, very hard, especially bias, and I think that's really hard in this market as well. But stay tuned. Tomorrow's video, we're going to go more in depth on options, basic, what the hell is an option, why I chose to day trade options as opposed to regular stock, and we'll get more into that. But the big thing I think from this video to take away is the market moves based off of psychology of buyers. That's why these levels here, like if I'm throwing down, we'll say here, this is where buyers are stepping in. As we see here, sellers were stepping in at one point, very hard defending this. We crashed multiple times, but because of the psychology of other people and past price action, that's why the market moves. There's a bunch of perceived value out there, which causes stocks to be a lot more value. We can look at that with a bunch of those big growth names right now: Meta, Roku, Netflix. Any of those have been crashing, and most of it is because, 1, we are in a bull market, and 2, it's mainly based off perceived value. So the market moves off of that value that is perceived by buyers and sellers. Today, just kind of an intro into why the market really moves, and some things that to look forward to in this series for